there's an extent to which you can point a very bullish outlook for the banks, but also that a lot of it might be expected and priced in. Do you think the yield curve will steepen sufficiently to deliver more share price gains again for the banks next year?
Well, it's not just a matter of the yield curve. I mean, look, banks, financials in general, but specifically banks and brokers, that have a very good year. But yeah, we see more room to run here. I mean, when you're investing in financials and specifically banks, you have to have a macro view. And my macro view is that the economy is still pretty strong. So, I mean, that is good news for the banks that finance the economy. But we've also got some things like loan growth that's finally showing up. And there's some pent-up demand as far as both inventory build and kind of CapEx plans that I think are going to call for a lot of financing next year. So I think it should be still a good year for the banks. Not that they're going to repeat the great year they had last year, but I think we're still looking at banks having a strong year in 2022.
I want to go through some of your calls. Firstly, Goldman Sachs within that capital markets exposure group. Why Goldman Sachs over Morgan Stanley?
Yeah, so I mean, it really comes down to two things. One, just on a valuation basis. I think Morgan Stanley's valuation reflects a lot of the work they've done, diversifying away into things like wealth management to kind of more stable revenues. Goldman's made a lot of progress there too, not through acquisition, so it's moving more slowly, but I think the market's kind of underappreciating that. So as I look at next year, I think capital markets are going to surprise to the upside. Revenues will probably be down year over year. I think it'll be better than people think. That plays right into Goldman's strengths, and especially if you look at price to book relative to their ROTCE, the stock's just trading too cheaply to ignore here still.